How to make money using one day momentum. Now, in the last video, I gave you a general idea about momentum. That's more a global way of looking at momentum. What we really want to look at is very specific ways of making money using momentum, because on a day-to-day basis, if you want to make money, then you need to get down to a lower time frame, look at tactics, look at things which will make you money using momentum. Now, what is the one day momentum? One day momentum is just a stock which is having a big move for a day. So if you look at, say, the universe of stock, and if you sort it by, say, price percent change, this particular stock, obviously sometimes lower price stock can dominate this list, but this stock was up 22% today, yesterday. So if you identify this kind of a move early in this move, like during the day, early in the morning, then let's say, like, if assume that look, and you got into you identified this move in the first 4 or 5%, then if you had entered at that stage itself, you are looking at additional probably 15, 18, 15, 20%, 15 to 16 or 18% return, right? So one day move itself is very profitable if you can identify that. Or like, say, look at this, this was the 9th ranked stock in terms of price percent change for yesterday, TEL, okay? And I found this stock, actually I found it at around $8.40, but like, and by the time my full order could get executed, it was 8.45. But like, still, if you look at this particular at 8.45, if you look at that stage, the stock was up only, like, say, probably 4%, and then the additional 6% move happened during the day. So this one day momentum itself is a big move if you can capture that. And a one day momentum is a signal. If there was no momentum before that, and there is a big one day momentum, here there is one big one day momentum, this started off a momentum phase. You will see that every single momentum swing or a momentum phase will be triggered off by some sort of a one day momentum move. So a big one day momentum compared to where, like, say, if you look at this particular stock and say this is down move, this is down move, this is still a down move, and then the momentum changed. So even on this day, if you bought that stock, from that point the stock made a 10% move. So 1 day momentum itself is a very good signaling criteria for selecting stocks to buy. Okay, so if you look at that, that is how we built our system. Like, say, this stock, again, like, if you identified it early in the morning and the stock had a momentum at $1.73, and it's like high price stock, so it went up $6.58. So identifying momentum, one day momentum itself is very profitable, either for capturing the same day move, that means like you're capturing part of the move, because if you, like, say, let's take this example again, 8%, if you identified this move at 4% level, you could have got additional 4% from this, unless there is a gap up where, like, and there is no way to capture that particular move for the day. You can capture part of the gains by just focusing on stocks with one day momentum, and this works on both sides. Like, if you're looking at the short side, see, but like when there is a gap down, the part of the profit you cannot capture. But if there is no gap down, and if a move like this happens, even though there was a gap down, but this was a long range bar, right? $14.57, and at one stage it was like down probably 20% because it recovered some of the gains. If you identify these kind of stocks early, then you can make money, right? It's very simple. Like, if you have to make money on a daily basis, what do? You select a stock which has a momentum on a one day time frame, and that is why it becomes critical to identify this kind of stocks. Like, if this kind of a stock, okay, if you identify it in the very beginning of the move, then you get more bang for your bucks, right? And this is where it becomes important and very critical to try and identify momentum in the first 20 minutes or first 10 minutes, 30 minutes or first 1 hour at best. Okay, because if we can identify the momentum as early as possible, sometimes you can find it in pre-market itself. Like say this Xilinx, you know that okay, this stock was going to go up based on pre-market itself, and after the gap itself, it like went up. I think say around $5 or $6 or $7-8, right? And after that, it kept on going up for next 2 or 3 days. So 1 day momentum, and even if you see here, the 1 day momentum itself, like when you look at 1 day momentum, there has to be a context in the sense the stock was in a downtrend, right? So this was a negative momentum, and then there was a 1 day positive momentum. That positive momentum signal, and that signal itself led to a 10% move from there. So 1 day momentum, just 1 day momentum, is a very good indicator of next half an hour, 1 hour, 2 hours, or next 4 hours profitability, or next 1 day, 2 day, 3 day, 5 day, 6 day, sometimes 10 days profitability. Okay, let's look at the stock. Okay, what happened here? This is a 1 day momentum, right? Compared to the last 4 days or 5 days where the stock was going, this was a big bar, right? And this momentum was in absolute terms bigger momentum than any of the days momentum for last 5 days, right? What happened after that? This 1 day signal itself has led to 16-17% move. So just a 1 day momentum move has a significant valuable information for a trader. It tells you that hey, I'm going to go up, okay, from here, or I'm going to go down. So if we select stock based on 1 day momentum and play them till the momentum lasts, we don't know how long the momentum will last. I don't know how long this momentum will last, okay, but I already have a profit. I am already out of that position, part of the position with a profit, and rest of the position, even if unless it gaps down, I'll still be coming out of that as a profitable. So using 1 day momentum, we can either day trade that momentum, and it can be very profitable if we use certain tactics, and I'll talk about those tactics, okay? Or we use the 1 day momentum as a signaling criteria to get into a trade which is going to last 3, 4, 5, or 6 days, okay? So based on that, what we do is we create momentum scans. And what are those momentum scans? Various momentum scans is we are looking for a stock which has an absolute momentum, okay, of 4%. So we are saying that, look, and I am going to look at a stock which has an absolute momentum of 4% and for the day, right? And volume is greater than V1 and volume is greater than 100,000. These are liquidity conditions, right? And this is liquidity. V by 100,000 is liquidity condition. V by V1 is to like improve your probability of that momentum lasting, because if there is volume along with the momentum, then what is likely to happen is that this momentum will continue, and this is what we want to find using this 1 day momentum. And where will this momentum work best? If you can identify it early in the cycle, if you're just doing it for 1 day, or if there is a context is either there is a negative momentum and then there is a sudden burst of momentum to the other side. So this person was running in this direction, and then suddenly he started going at this direction at a fast rate, faster than like what he was going down at. Then 1 day momentum signals that probably there is likelihood of the stock continuing. Okay, so 4% breakout will basically give you stocks. Like this stock is up 8%, but it would have shown up in a scan probably halfway down the unless there is a gap up. Most of the time the stock comes in during the day early, and then it keeps on going up. Now in this particular case, there is a 1 day momentum. If you are a day trader, you didn't care about whether it was up yesterday or not, but like it was basically a momentum play for rest of the day. And if you go down on lower time frame, you can find that look, and it went up and it pulled back and then it went up. But we're not looking at lower time frame currently. We're looking at only 1 day momentum now. Yeah. Now that signal of 1 day momentum, if we give that 1 day momentum signal a certain background in terms of where to select it and where not to select it, then we can increase the probability of that momentum signal being more like likely to work, or increasing the probability of that momentum move making profit for us. And what are those criteria? Like if you are looking at, say, this as a momentum signal, like here this momentum signal didn't work as if you're looking at a multiple day move, but as a single day move there was still a momentum which was significantly greater than the momentum in the last 8 or 9 days, but the second time it worked. Okay, now if you look at what is the criteria, or what is the momentum signal, you are saying, look, the momentum signal, again, like this is a momentum signal and it is likely to continue probably, or yesterday it went up like, and after being up almost $2, right? So the context which we give is that what should be the action before the this 1 day momentum. The 1 day momentum preceded by phase where there was a negative momentum, or preceded by a phase where there was a very low momentum. This is like, and the stock was just like an up 0.37%. So that signal increases our odds significantly. If you buy this as a momentum signal, you're late, right? Because this was the signal. So what were we doing? So that is why the rules which we created, or the rules which we can create, because we want to make money, right? And if we want to create certain kind of conditional rules to say that, look, if this condition is true, then we want to chase this 1 day momentum for 2, 3 or 5 days. What are those rules? One is like, in the stock should not be up 2 or 3 days in a row. So let's say you get a stock like this. Okay, it had a momentum signal here and it had a momentum signal. So should you be buying this momentum signal? Ask yourself this question, think about it. Okay, and I'll give a pause in this video for you to think about this, because this is very critical. One of the critical mistakes people do in momentum is like they chase momentum after an earlier momentum signal has led this stock to a level. This was a momentum signal, right, on this particular stock, and that momentum signal has continued like, and it's almost 62% from that momentum signal. So we want to find momentum, 1 day momentum, where it is preceded by either a negative momentum or very low momentum. And we want, again, the second condition to be that we want that particular momentum to be at the beginning of the first day move as far as possible. So that is why the criteria 3 lynch. What is like, in a stock should not be up 3 days in a row. If a stock is up 3 days in a row, what does it tell you? That the momentum phase started 3 days ago. So what were you doing during that time? You were sleeping, or you were just like contemplating buying that stock on this day and thinking, okay, if I buy, this is what will happen. That this is the third day of this move, right? If you bought it on the first day, you're likely to make money, more money. And if you buy it on a third day, what is likely to happen? That momentum might not continue, or you're late to the momentum party. So that's why those criteria are critical, which is like a 3 lynch, like look for a stock which is not up 3 days in a row. Okay, and look for a stock which has linearity. See, a lot of stocks can make moves, momentum moves from any phase, any stage. Like they can be at 52-week low and they can make a momentum move. Like here, this is a 4% breakout, and from that 4% breakout, the stock has gone up 25%, right? All that we want to do is we want to add certain criteria to improve our probability. This can happen because the market phase itself was in line with that, so it worked. But many times it may not work. The better option is to like improve your probability substantially by insisting that the stock is already in a longer term, or not longer term, but at least on some sort of a momentum phase, and then there is a consolidation and then it continues. But that's not necessary if you're just trading 4% record, because the 1 day momentum itself is good enough signal in this particular case. Like if you look at the 1 day momentum, so for 5 days the stock was going down, right? And then there is a change in momentum, or there is a switch in momentum from a downtrend. Now this particular stock is up $5%. Now what is the likelihood? There is a probability. These are all probability. There is no certainty that this will continue. We don't know how long it will continue. It will continue for 3 days, 5 days, 10 days. Sometimes it can continue for like I think this is the one, right? Not N phase, or like which stock has got the lot of momentum, like So at some stage, momentum started in this stock, even though it has pulled back. The momentum has continued for like since this particular big, in the context of downtrend, it has like continued for almost 180 bars, right? So one day momentum is a very good signal for predicting likelihood of that momentum lasting for the rest of the day, or lasting it for next 2 to 3 days, or it can be also a predictor, or it is a signal which tells you that this stock is likely to go up for more period of time. Each of these stocks, if you look at it, which has gone up a lot, has started their move by a momentum signal. So if we understand this, then what we can do is we can look for absolute momentums on various ways. One way is to look at 4% breakout. This is just a momentum signal. It tells you that these stocks have an absolute momentum of 4% plus. This stock was up at least 4%. Now here is a stock which is up like 4 days in a row. So should you take this momentum signal? Because if you take this momentum signal, you're late to the party. The momentum already started much earlier, right? So think about this. If you just like don't understand anything, but just understand, look, one day momentum itself is a signal. Like here, there was a one day momentum, right? Doesn't matter how bad that setup was. Here, it was a very nice setup, but still, and that one day setup led to a 20% move. Here, again, this one day has resulted in probably like another additional 4% move. Okay, so one day momentum itself is a signal, right? And the more significant it is, like in terms of volume, in terms of magnitude of the move, more likely that it is going to continue. Like here, there's a one day momentum and that has led to a 12% move. So that is how you can find money every day. Okay, I will give you an example yesterday of like another trade which I did tell. Okay, this is something which like showed up early. It was up like around 8.40, and then I I put in an order and it got filled between 8.40 to 8.46 and then the stock kept on going up. Or the other example, I think, which are the other things which I highlighted in the newsletter, is like YGY. Now this stock is up 15%, 15.92%, right? In this particular case also, you could have identified this stock when it was up only 4 or 5%. So if you did that, you managed to capture rest of the day's move. Okay. Or this stock, I was not in this particular stock. I was in some other stock which didn't really make a move after like being up in the beginning of the day. But that is, I think ECPG is, yeah, this is the thing. Okay, it only had a momentum of 2.26%, so the absolute momentum wasn't really big enough, even though I got in and I'm profitable, slightly profitable, but my expectation was that that momentum will continue and it will be making a move. So one day momentum, okay, keep this in mind. You can make money using just one day momentum. You don't need to know rest of the things. You just need to like scan stocks. You just read. If you just use one scan, okay, 4% breakout, and don't use any other scan, and take out every single scan indicator on your chart, okay, and just use this one particular indicator, okay, you can still make money. The reason why you can make money is that as long as you select the first day of the momentum move, and if you can select as soon as it happens by running the scan during the day, what will happen is you will get rest of the day's momentum and the follow through from that momentum. And that is how the market operates. This is inherent to the market. This is not something which I invented. This is not something that like any market wizard or anybody invented. This is inherent tendency of the stock, like inherent tendency of a man when he comes home is to sit in front of TV, right? That's like the inherent tendency of dog to sniff everything or raise his leg whenever he finds a pole. Same way, the stocks have inherent tendency to go up in the direction of momentum, and that's what you want to exploit. And knowing this simple thing itself can make you money, because all that you need to do is to find a stock which has an absolute momentum, okay, and look at some criterias so that like it doesn't have a momentum before that day, and just buy that stock on that momentum. you will be able to make money. Okay, so this is why, like, there's another way of saying it, like, look at whenever a stock which is not doesn't have a range expansion, positive range expansion, um, in the last 4 or 5 days suddenly has a positive range expansion. This is a positive range expansion compared to its last 5 days, right? This was like a 5.43% this thing, and the stock moves in the direction of range expansion. So if you looked at this as a range expansion signal, the stock moved in the direction of the range expansion. Now obviously you'll ask, look at this stock will not show up in 4% breakout. You're right, it will not show up in 4% breakout, but that's why I use combination of 3 momentum scans to find stocks even like this. So let's look at those scans. Absolute momentum scan, one is like a 4% breakout. Okay, and if you really don't want to complicate your life, you can just trade 4% breakout, and if you do 800 900,000 trades in a year and manage your risk very well, you still can make a lot of money. Okay, so this is one scan which is looking for an absolute momentum. It works better on smaller cap stocks, or when beginning of the moves there's a big range expansion. Okay, now in the market there are different kinds of stocks, right? There are these smaller caps, but there are also higher price stocks, or stocks which don't move in the magnitude of 4%, right? And you have this stock, all of these like are negative, right? So when you run, this is a dollar breakout scan. Okay, again the idea is same. What we are doing is we are going to find one day momentum and expect that momentum to continue, right? So in this case, if you look at, like, say, basically this particular stock BKNG, this stock was up $25 from its opening price for the day, right? Or if you look at this is a better example, Meili. But the stock is not up 4%, right? This is a very high price stock. It's priced at around $355. These kind of stocks do not move in the increment of 4%, but they still offer you money, because this stock also had a range expansion here where it was up 3%. And if you look at just absolute dollar terms, from there it has made a $16 move. So these kind of stocks, if I just use 4% breakout, some of the breakouts on these kind of stocks you're not going to capture, right? That is why what we do is we use 4% breakout, and we also use a dollar breakout. So using a dollar breakout, you're likely to find the higher price stocks, the one which like don't really make a 4% breakout, but like you can enter them if you find the momentum early enough in their momentum move, and by risking $1 or something you can get $2 or $3, right? Here is an example of $3.92. This stock, is this a range expansion in the context of like last 4 days? It was like, this is a negative day, and this was like just this was again a negative day of 0.13. This was a negative day of 2.98. This was a positive day of 0.67, and this is 0.19 to the downside. Considering that today it is up 2.23, which is a range expansion. Now if we find this stock early when it was up only $2, we could have still made $1.92. And how you find them is by running this scan, and especially trying to focus on this scan in the first 10 or 15 minutes is going to give you a lot of bang for your buck. Because if you find something which is up $3 plus in this scan in the first 10 minutes or 15 or first half an hour, okay, that is a stock, if it is a high price stock, has the potential to make another $3, $4, $5, sometimes $8, $9, $10, $15 move. And now if we can get into that, what happens is the follow through momentum for the day results in we making money. So you have to select stock based on momentum, and if you select stock based on a momentum signal early in the day, then we end up making money. And you can make almost money every day if you really understand this phenomena of one day momentum. Because a lot of time I see people like, and they are in love with the stock, and then they are trading that stock, but that stock doesn't have momentum, right? You have to go where the momentum is. You have to go where the latest hottest thing for that day is, or for that moment is, basically, right? There's no point in like trying to chase a stock which is dead and has no momentum. So this is what you need to focus on if you want to make money in the short term, or even on intermediate term, or if you want to make money every day, or you want to make money every week, or you want to make money every month. Then focus on stocks with momentum. Okay, by running a scan like per% dollar breakout. And again, if you just run one 4% scan, that's more than enough. Okay, if you have a bigger account, then obviously smaller stock becomes a problem, or you want to improve your risk reward setups, then dollar breakout works better, because in this case it went up $3.91. If I had identified this stock early, or this was like in a $2.85, for risking $2.85 you make like in a $4. So that's how you can get the absolute move is not like in a magnitude of the move in percentage term may not be big, but in terms of your risk reward will be much better, because what you're doing is your percentage risk is very low on that trade. As a result, you can put in like a lot more money. So the easy way to understand that is like, say, let's see, not the tools. Okay, let's look at this. Like, say, you have 100,000, okay, and you're going to risk 1% of your capital, and say, let's say you have a stock which is priced at a stock had a 10% breakout, so it was like, and I said $11, okay, and $10 is your stop. So you're going to be investing 11,000, and your risk is 10% in this particular stock, right? Now, as against that, you have a stock which was like, and I say priced at 100, okay, 102 was the breakout, so because a dollar breakout, and 100 was your stop, because that's the dollar breakout, the way it operates. How much can you risk for just 1%? 51% of your capital. Okay, so if the earlier example where you were like entering this $11 stock with 10, okay, that stock makes 20% move, you're going to make on 11,000 how much money? You're going to make like 20% of 11 is like 11 by multiplied by 1.2% is equal to 13.2. So you're going to be making $2.2 multiplied by 1,000 shares. So you're going to make like 2,200 money on that particular thing, right? Now take your second example where you're risking you're 102 and you're 100. Okay, now you're taking 500 shares here. Okay, now this stock is high priced. Okay, if it makes a 10% move, you're going to be talking about 102 into multiplied by 1.1. So you're looking at 112. So that's around $10 on your 500 shares. That's $5,000. Okay, so that's how you can move your account very quickly if you understand this logic of like slower moving dollar breakouts, but the risk reward being more in your favor, because you can put in more amount of your capital for the same amount of risk, or like then you can like do a lot more money. Okay, so this is the second kind of one day move, kind of a breakout where we are using to find a momentum move. Now I said like there was some example which we were talking about, and I said like that will not show up in a scan because it was on 4% breakout. So for that, what I use is I use a low threshold breakout scan. So low threshold breakout scan basically has certain absolute momentum conditions. Okay, low threshold breakout scan, like in the case of 4% on dollar breakout, you're just running it on a universe of US stocks, okay, or universe of US stocks plus ADR. You're not really looking at a filter to filter stocks with just momentum, while in this case what I'm doing is I'm looking at a stock with an established momentum. So this condition is important in this. Okay, this is the liquidity condition, this is the price condition, but this condition you're only selecting stocks with established momentum. And on that stock, what you're saying is, if you try and understand mathematically this thing, what you're saying is C is greater than O. That means the stock was up for the day, and C was greater than C1 also, because sometimes stock can gap down and it closes above the opening price, and it can be also up. You're ensuring that the stock is up for the day also compared to yesterday, and C1 was less than C1 is greater than C1 by C2. So today's move in absolute percentage term is greater than yesterday's move, and yesterday's move was less than 2%. So you're basically looking for a stock which was like which has momentum. Okay, let's look at some examples that might show you. Like, so this stock was down 0.28%. It was less than 2% up, right? And it has a momentum. So the advantage of using this is like something like this. Okay, it is not really a 4% breakout. Why is it not a 4% breakout? Because it didn't had, but it will show up in dollar breakout also. So, but if it doesn't show up in dollar breakout, it will still show up in your low threshold breakout scan. So let's go to something which is like down the line, even smart. It will not show up in your 4% breakout, but it will show up in both dollar and low threshold. But let's go to like say dollar breakout as a condition of 90 cents. So let's go down the line to see something below that, to see if you can see a setup. Like this is a setup where the volume built up late in the day. Okay, the volume came in much later. If you see like on the stock also, volume came in much later. Like volume came in earlier, it had a breakout without the 4%, without it meeting the 4% condition. How did I find it? I found it in this particular scan because I run these scans early in the morning. I'm always looking for, see, my objective is to make money every day. Okay, if I'm in front of the computer, even if I'm in a meeting, I'm doing my other business, I'm busy, I still want to make money as far as possible. Okay, without losing money. So I look for in the first half an hour to find, or first 1 hour to find setups in all these three scans. So you will find like, and I say that ECPG will be an example of a setup which came from this kind of a thing. Or even NBEV before it had 4% breakout was showing on this scan, or Pilgrim's Pride. Now this Pilgrim Prides, I put it in the newsletter also. It's up only 2.43, right? Stock had huge, good momentum, small consolidation, breaking out. Now these kind of stocks you can capture using this low threshold breakout scan. Okay, if you keep going down, you'll find like sometimes you get very low risk entries using this particular scan, or you get entry on a 4% breakout before it hits a 4% breakout screen. That's why I use this particular scan. Even this particular breakout is like only 2%. So this tends to find like some of these stocks, like say if you see this stock, this was a good breakout, right? And in terms of context of like say up leg, so orderly momentum is there. Now many stocks don't move the way smaller caps move, or some of the sectors like banks, they're not really fast moving, but still this stock was up 2%, and on that signal you're making 4%. You don't look at like, and you're just looking at percentage of your risk. That's still a good setup, right? So some of these kind of setups you will find when you combine this low threshold breakout scan with dollar breakout scan. Obviously, if you run it on the complete universe, you're going to get thousands of stocks, and that's not the objective. The objective is to find something which is already in a established trend, and then if you can find a setup in that particular thing. So for this particular thing, we are US common stock, ETF, American depository receipt, and this condition has multiple parts to it, but it's simple to understand. This is liquidity, this is price, this is absolute momentum on a quarterly basis. So you're looking for a continuation move, and C is greater than O and C is greater than C1. That means today the day stock is positive, and today's move is greater than yesterday's move, and yesterday's move was less than 2%. So sounds complicated. If you just sit there and break the pieces, you'll understand the logic of what we are trying to do. We are finding a stock which might be. Now the advantage of using low threshold breakout scan is like many times you find entries which are like lower risk, because the stock shows up first here, and then during the day, rest of the day, it will break out. So what I do is like I am running these scans throughout as soon as the market opens. I'll be running, I go through dollar breakouts, I go through, and that time in the morning, if you just do it in the first 10 or 15 or 20 minutes, you're not going to get 300 stocks. You get like some 20 stocks, and then throughout the day, it keeps on building. Like you have first 10 stocks, but those first 10 which show up, that's really what you want, right? Because that's the momentum signal which has the potential to continue for rest of the day. Because I said like one day momentum how to make money using one day momentum. But that's the say, you can just change this title to say how to make money using first 30-minute momentum, because the first 30-day momentum has the potential to continue in the direction of the momentum. Like this stock had a momentum in the first 30 minutes, right? And it continued in that direction. Or like you could have identified Xilinx as a stock which had a momentum in the first 10 minutes or even in pre-market itself, and it moved in the direction of the momentum. So the first few stocks which show up here, they are like really valuable. And not only that, when they show up, if you find a stock which is up only 90 cent, and like you have 10 stocks and they're all up 90 cents, that's of not much value. But you have a stock which is up $3, $5, that's of value, because it tells me that that magnitude of the move as measured by dollar move is big. And then if I can get into that stock, and if remainder of the day the move the momentum continues, then what happens is you're going to likely to make like this particular stock went up $16.88. So if you in the morning early, if it was up like $4 or $3 or $5, that is the stock which is going to go on and make another $10 move. Like if you see like in the beginning of the move here, the stock was up already $2.21, right? And then for rest of the day from there it went on and made around $12 move. So momentum, the first 1 hour momentum or first 30 minutes momentum is so critical if you want to make money on a daily time frame, right? If you want to make like money on a weekly time frame, like weekly in the sense you hold for 3, 4, 5 days, you still run the same scans and keep looking at the stocks, and this builds over the day. In the morning you'll find few stocks, and once you run the scan, like say after half an hour, it will have more and more. But when I say run scan half an hour, that is not how I do it. What I do is like right from the opening moment, I'll be looking at this, then I toggle into 4%, then I toggle into low threshold. After 10-15 minutes, what I do is like I just have this bullish working watch list. I quickly copy all the symbols from here, put it in the bullish working 4% and dollar break and LTB, and then go through each one of them. So I will say, just to show, I will put all the dollar breakout, and in the morning you're not going to get like 300, 400 unless it's like a crazy morning opening where there's lot of gap ups and lot of buying. Most of the days you're talking about around 60, 70 stocks to go through quickly in the first 10-20 minutes, and then so I will go into this particular list and I start looking at from sorting by dollar, and I start looking at stocks, and that particular loop will keep on happening till I find 3, 4, 5. I try and buy 5,000 shares as far as possible in the first 1 hour. That's that might be 5 positions probably, or 3 positions. The idea is if I can put in that much amount of capital at work, the likelihood of making 3-4 thousand increases if I adjust 1,000 shares, or if I adjust low price stocks. Like yesterday I had 1,000 shares of TEL, and I had 1,000 shares of that VZ see, as you know, as you can see, I don't even know what these stocks do. I just go by the symbol. So I had 1,000 shares of this, I had 1,000, but that was okay, at the end of the day I still ended up making $600 or $700, but that's not that's that doesn't give me much of a pleasure nowadays. I look for trying to make more than that, but for that you have to be in the stock. But the process is very simple. The process is to use 1 day momentum, either 4% breakout or a dollar breakout or a low threshold breakout, and find stocks as early as possible in the day, and then buy it and put a stop. And also when I'm putting a stop, earlier I used to put a stop which were wider stop, say if I was buying something like TEL, okay, I was trying to put a stop at the low of the day. Now I know more. If I buy in at 8.46, I put in a 30-second trailing stop, and as it kept on going, I can reduce my stop from trail of 30 cents to 25 cents to 20 cents, and in crazy situations probably 10 cents also. So that's the idea. The idea is very simple, and the idea is not something which I invented, but it is inherent in the nature of the moves. That 1 day momentum, if you can identify it in the first 5 minutes, it is likely to continue for rest of the day. If you identify it by end of the day, it is likely to continue In most cases, these are probabilities for next 2 or 3 or 4 5 days. Okay, and the one day momentum move itself can be very profitable if there is a big follow through for the day, and if you can get into the move early. So you can make money by just forget everything else, forget TI65, MDT, anticipation, nothing. You just run like a momentum scan, and if you are like getting confused by too many scans, you just run one scan, you can still make money. Okay, you can just run one scan, and because it produces so many signals and gives you so many opportunities, over a year you will get like 2000 3000 trades just using one scan, momentum scan. And inherently stocks have a tendency to move in the direction of momentum, right? Like inherently the man or the woman has a tendency to come into the house and sit in front of a TV, right? No, it might be some nonsense going on, but that's like a genetically programmed evolution has happened after TV was invented, and in the last 20 years 30 years, that if you see like in our store also, like we have sitting arrangement where like people can sit and like look at different things and all, or they can see the mechanic working on their, but they don't want to do that. They just take the spot which is the best spot and watch TV. Or nowadays they just like an inherent there's a further evolution happening in human being where like it's not even TV, it's like their mobile phone. So same way stocks have this inherent inbuilt or inborn tendency that they are going to have a range expansion and they'll move in the direction of range expansion. If we know that, we can make money. So think about this, and if you can just run one scan, you can still make money as long as you can get in early, and you don't buy an extended stock, you don't buy a range expansion signal which is like you don't buy a range expansion signal here, you buy a range expansion signal here where it would have shown in dollar breakout, right? Or you don't buy a range expansion signal here because the stock is up 6-7 days in a row. You don't buy this range expansion signal, you buy probably this range expansion signal or this one because it's up. If you are trading just for like the day, yes, you can still buy this signal and make money for the day. But if you're going to be like looking at it as a swing, now this is a swing signal, probable swing signal, right? And the swing can start from any place, like, so you don't have to worry too much about having a momentum on a longer time frame or things like that. Like if you see in the last 3 or 4 days what has worked in the last 5 days, like say if you look at something which I recommend many people to study, but I don't know many people do it or not. Let's take an example. This particular stock made this move up 41%. This is in 3 days, it's gone up 41%, right? It's near the low. Okay, so you don't have to necessarily select stocks with longer term momentum or worry about other things. And I don't know what is TI65, it says average C by 7 by, you don't need to worry about that. All that you need to know is there was a 4% breakout, and then you just go buy this. Like if you knew nothing about this particular stock, which I don't know anything about, and there's a 4% breakout, and if I had bought that, it still is up 20%. So as long as you have a little bit of little bit of intelligence, and you just like buy a stock like this, and it goes up 17%, and all of them will show you your 4% breakout. Obviously you don't buy something like this, right? Because it's like all over the place. This again, nothing happened much after that, and in this particular case again, like the range expansion, and the stock moved in the direction of range expansion, and all that we have to do is after that put a trailing stop. So we are not even like really worried about how do I move my stop or stuff like that. Just like decide to look at most of the time I put my trailing stops on a stock price below $20 at 40 cents, between 40 cents to 30 or 25 cents, based on like if it is low priced, and if it is higher price stocks between $1 to $3. And then after that, if it is going to follow through, it follow through. If it is not going to follow through, you get stopped out, and there is always a next trend. Okay, or you can look at like say here like Western Digital Corporation. There's a range expansion here, right? This range expansion led to 16% move. It's a different story that it faded, but like if you're using a trailing stop or things like that, it would have taken you out of the profit, right? Or range expansion led to this move. So to summarize, stocks have an inherent tendency to move in the direction of one day movement. So if you can identify one day momentum early, as early as possible, that is why sometimes, like, and if you do NTRT, MTRT, which is night time, right time, or morning time, right time, you identify a stock which is likely to go up next day. So you don't even wait. You just put an opening price gap order and you get in, and then if the momentum continues, you make money, right? If you can identify stocks in the pre-market, it is better. But like if not pre-market, if you can identify stocks with established momentum as given by our formulas, as given by our scanning condition or absolute momentum, and buy them if they meet your criteria of not being up too much or things like that, you'll find many moves like this, and that's how you make money. Very simple. You don't need to understand anything. You don't need to understand EPS or PE ratio or like debt to books or some capitalization or short interest, or forget all those things. Okay, just find a good 4% breakout, enter it with a closed stop, and put a trailing stop. And if it has to go up, it will go up. I bought this and I put a trailing stop. The trailing stop was never hit, and I'm up $400 for that position basically. Um, and that's how you can make money every day, every week, every month, every year. And the same thing operates on the short side also, but we are primarily discussing one day momentum to the positive side on this particular video. So think about this. Just if you can just like, and if you forget everything which you read and like all the chart patterns and all those things, if you can just understand this concept deeply and understand that just one day momentum signal is a big powerful momentum signal, as long as I'm willing to live with probabilities and use stops, I can make money. Then that itself will eliminate a lot of clutter in your mind. That itself will eliminate a lot of your confusion, and then you can just focus on this one single inherent phenomena in the market, which is like stocks are going to move in the direction of momentum burst, or stocks are going to move in the direction of range expansion, and I need to find that range expansion as fast as possible when the market opens, or if possible in the first half an hour or first 1 hour, and then get onto the trend and keep on like put a trailing stop. And if the trailing stop hits, that tells you that the momentum is no more lasting, right? And the momentum has ended, and that's the end of the story. And then find the next trend. You will find a lot many trades, and you'll not have many confusion in your mind. And this is a very simple concept, but it works. So think about this. It's $1 million idea.